the importance of not missing the market's best days. So if you there are like like if you miss the 10 best days in the market over a longer period of time, like they have taken around 30 years of period, you end up missing out on 54% of returns. Now, why that is important? Because as it happens, the good days happen during the bad markets, like the best days when we say. So 50% of the good days or the best days of S&P 500, if you take, they have happened during bear market. So if you end up selling because you believe that market is going down and we are entering a bear market, you are more likely to miss out on the best days of the market. So in a long-term scenario, it's very difficult to time the market. So this is one answer I always say, is that whether you should time the market, probably not. You should not at least look to sell at a time when the market has gone down. Also, there are a lot of analysis people share, and I think one of the analysis we also shared in our WhatsApp group earlier. This is a chart of when after closing in correction territory, typically what are the returns 1 week, 1 month, 3 months, 6 months, and 1 year later. And if you can see here, 66%, 2 out of 3 times within 1 week of S&P 500 closing in correction territory, we have seen positive returns. And 86% times after 1 year, you have seen positive returns. So this itself gives you another data point that it's very difficult to uh, time the market by selling at the time of correction, especially when we have seen very hard cuts, like correction territory usually defined by 10% cut in the market. Yeah, and if that is a trigger which leads you to sell, it's a pretty bad way to time the market, because then you will lose out on this recovery. So combining this with the fact that the best days usually happen during bear markets, and you can in long run it can really have a negative effect. We don't recommend timing the market. On the other hand, you can probably, if you reverse this logic, because the best days happen during this bear markets, buying on a dip is probably a much better strategy, and you can actually allocate better during this time. That is how one should look at this, as an opportunity, because ultimately, as we have talked about, long term markets go up. More long term, we understand that it's always a good thing to be in the market and play out the long game. So that is one way to look at it. And even if you are our all access subscriber, you have seen in last 10 days we have identified a couple of good opportunities to buy at the local bottom. And if you see, many of those things will when we did the same thing last year during the yen carry trade meltdown in early August. So all these opportunities have usually resulted in pretty good gains also in short term, not just long term benefits, but also short term.